Welcome to ECNTRADE Daily Video. Before we begin, it should be noted that any advice is of a general nature only, and that your personal circumstances have not been taken into consideration. Hello everyone, my name is Rob Clayton and thank you for joining me. Overnight it was another bearish session for the Australian dollar after taking another challenge to the upside was rejected above the 68 area and now posts a fresh low for the week and also for the month around 67.24 this morning. On Tuesday, the Australian interest rate hit a 7-year high after the Reserve Bank of Australia invoked its fifth consecutive rate hike by 50 basis points as it's widely expected to 35%. This is now the fastest series of rate hikes since 1994. The last time the Australian cash rate was around these highs was in December 2014, when it sat around 2.5%. Following the rate decision, RBA Governor Phil Lowe said in his statement that the board would stay committed to its goal of reducing inflation to an ideal level around 2 to 3%. Inflation at this point into December coming could see peak around 7.75 before the decline. The board expects to increase interest rates further over the months ahead, but it's not on a preset path. The size and timing of the future interest rate increases will be guided by the incoming data. Later on, now that the RBA rate decision is in the rear view mirror, we can now look towards Wednesday's Australian Q2 GDP figures. Furthermore, we've got on Thursday Governor Lowe speech, and also we have Jerome Powell from the Federal Reserve. And furthermore, we've got an ECB rate decision to come as well. So there's still quite a lot of data to be unfolded. With the market still remaining heavy, as you can see here, that we are still pressing towards support after 67.80 was crushed overnight and 67.35, that we're looking at the key level of 66.80, reassess from there. If the market fails to hold around 66.80, then we could be looking at 64 cents. But not get too ahead of ourselves, as the RSI is getting somewhat low, and the ADX, however, is still supporting a bear trend. The dollar index, which measures the greenback strength against a basket of 6 major currencies, rallied or rebounded to refresh its 20-year high around 110.52 before dropping back to 110.25 this morning. This has posted a bearish outside range day for the euro. Very whipsaw price action and still attempting to try and break beneath this level of 98.80. I feel that with the pressure still showing downside risk, the divergence may kick in and surprise some of the euro bears, and if so, then the dollar could slip beneath that 110 area and therefore look for the euro to rebound and take another challenge to that top side resistance at 99.80 and reassess from there. The dollar yen, well, the market has rallied on through 141 and now trading at 143. It was mentioned yesterday that we could see an intervention from the Bank of Japan, as when we were seeing around these levels late 1990, the Bank of Japan conducted an intervention in the yen on instructions from the Ministry of Finance. However, if we do, then we could see a sharp downturn 1 to 39. In light of the pattern though, and also if we look back on the monthlies, we can see here that the risk is still very much to the upside until, or in case we don't see any intervention, that is that the break from 143 could lead us up to 146 due to the monetary policy gap between the Bank of Japan and the US Federal Reserve is expected to or continue to widen due to the view that the Fed will lift rates on September the 21st and roughly around 50 to 75 basis points. Therefore has increased the strength along with the dollar posting a fresh 20-year high, and therefore does put further indication that the bulls will be determined to try and take dollar yen higher. But like I said, keep an eye in case we do see an intervention. Looking at sterling, well, the market staged a rebound, rejected that top side challenge, which was roughly close to 116 after it did break 115.80.90, but still didn't get the confirmation because we never saw a close above there from New York. And from that, the market has failed somewhat. In light of the pattern that we're seeing here, although there's no bear trend anymore, that the risk could be looking back towards 114.5 again and reassess from there. The market is still determined to try and at least take the market higher. Now with the UK got a new Prime Minister, and therefore could see some brighter aspects coming out of the pound in the coming days. The market took the challenge to that top side for gold, which was around 1,719, but as we can see, was clearly rejected after peaking at 1,726 briefly. Markets turned back to the downside and looking towards 1,680 as a potential target. Reassess from there. Due to the fact is, if the market doesn't hold, then we could be looking even lower, which is around 1,635 to 40 reassess. Well, it seems that we've returned back to the bottom side of the range after the inverted hammer rejected at $86 a barrel, and we are pressing on this level now at 86, and therefore could see further risk if we see a break, that is towards the bottom side, coming in around $82.60.90. The rejection from the midway point, along with the MACD also coming in slightly negative, does give a little bit of concern that this level may not hold, and therefore could see the market break and take that challenge lower. But let's see how we finish for tomorrow morning. But nevertheless, for most of the start of the day, the bears are evident. Let's see if this level can hold or not. Well, that wraps it for the morning. Thank you very much for joining me. And as always, look out for the intraday report. Hope you enjoy the great start to the day.